Hello, everybody. How is it going today? And welcome back to another lesson. Thank you very much for keeping up to your lessons. You guys should be very proud of yourselves if you have gotten to this lesson so far, which will be lesson number 9. I know that there has been tons of material for you guys to go through, and I know that it's a very daunting and perilous journey, but I'm very grateful and appreciative for the fact that you decided to choose me as your instructor, and I really do hope that you have taken so much away from this so far. The ultimate goal is to improve your skills as a trader, right, guys? And we are going to get to so many different tutorials. And just to show you guys some of the profits that I actually make and that I tweet, okay, guys? Make sure you guys are actually going through my videos on YouTube as well because there are so much free content. For example, if you go to my playlists as well, I'm not even sure if you guys know this, but I've got a lot of live trade, guys, okay? I've got so many live trades that you guys should definitely take a look at. I've got over 45 live trades, and you guys can see proof in the pudding. I'm making $215 in 8 minutes, $380 in 15 minutes, Sometimes it's 100, sometimes it's $80 an hour, $100 an hour. Sometimes it's way more than that. There are times where I'm making $522. Sometimes I'm making $1,300 in less than 1 hour. And the whole goal of these courses, guys, is to empower you with the proper skills that you need to succeed as a trader. When you think about what you guys have contributed to this particular package and what it actually cost you, $200. I bet you guys have all lost well more than $200 to get to where you are in this point of your life right now and where you are in this point of your trading career. Just think about the grand scheme of things and how much I really hope to have helped you thus far. And just to give you guys a real life example of my last trade that I just took, okay? My last trade that I took, I used to be an engineer, guys, right? I used to be a mechanical engineer and we broke it down as well. We're in Canada about $50,000 a year, worked out to be about $25 an hour, which was about 200 Canadian a day. In my last trade that I made a 12-minute trade. I entered it at 10:22 or 10:32, and I closed my position 12 minutes later at 10:44, and my profit was literally $278. Yes, I was playing a $20,000 position and I made a 1% gain. But imagine for a moment, guys, okay, where your gains are 1 to 3% every trade only. And that's what I'm going to teach you as a day trader, to focus on gaining these very small profits that add up to monstrous amounts every day. Even if you guys had a $1,000 account size that you were playing with and you gained 1 to 3% per trade, if you made, for example, an average of 2% a trade and you made 5 a day, well, you've just made your account 10% bigger when you think of it like that, right? So that's what I've always believed as a trader, which is to avoid exposure in the marketplace, which means to not be in a position much longer than you're comfortable. I personally do not have the tolerance to be in a trade for a long period of time. That is why I ensure that I make sure that I'm exposed as absolutely little as possible, because to me, I'm simply just not comfortable being exposed for a very long period of time. So thank you very much for keeping up to your lessons once again. And today's lesson, guys, is going to be the big picture and the little picture, how to interpret time frames. I'm sure you guys have all wondered, what are these time frames, right? Why should I be looking at the 15-minute chart? Why should I be looking at the 1 hour chart? Why should I be looking at the 4 hour chart? What does this have to do with the daily? So we're going to cover all of that, but just to give a very quick summary of what you guys should know by now. And please, I emphasize highly, and I encourage you highly as well to make sure that you're contacting me on Udemy here. Ask a lot of questions because I am here to help you guys, okay? I'm genuinely here to help you guys, and I want to answer all the questions that you have. And we'll keep it to we'll keep it to technical indicators and indicators and charts in general. And I'm sure that once you guys graduate through this class, you're going to have a lot of questions that you would like to ask me about your position as well, where once you guys complete the class, I assure you that I will have absolutely no problem discussing with you your financial situations and your positions in general and help you with financially advising. So when you think about this $200 package that you actually purchased, it's actually a really good deal, right? I really hope to improve your trading and bring it to the next level. I'm just adjusting my monitor here very quickly. I've got OCD issues. My desk is as clean as it can possibly be. Make sure you guys have a very clean work environment as well. Treat it like a professional job, okay? Despite me staying at home and, hanging out with my dog and watching Netflix and just kind of sitting back sometimes and enjoying the day, I'm still an incredibly hard worker. So make sure that you guys also understand the concept of working very hard. You need to make sure that you don't just treat this like any other job, right? This is an opportunity where you can actually change your life. And that's what I truly hope to do. I really hope that by the time you guys are done, all of these 17 courses, that you are going to feel empowered and you can just go out there and destroy the charts. Because if you can do that, nothing would make me happier in life than to know that I have students that are also very successful. And it would make me incredibly happy to know that I'm changing lives, right? So thank you very much for joining me through this journey so far. And today, guys, we're going to be taking a look at the big picture. And by now, you guys should know how to talk to me in the lingo when I bring up some things like, hey, it looks like we're going on an uptrend or a rally. Hey, it looks like people are selling off right now. Hey, it looks like we have really good resistances and supports. You guys should know what separates a really good trader from a bad trader. And that comes down to emotions. Despite seeing how goofy I am a lot of the times and how much I joke, you guys know that I'm a solid trader, right? And I stick to my risk management, which factors out my emotions in trading. I also focus on trading like a casino. I like to ladder my buys as it goes down to make sure that I'm getting the best dollar cost averaging. I like to make sure that I read the level 2 order book, which we will go over in high detail. I want you guys to make sure you're understanding the bids and the ask and how walls on one side push over to the other side. And on the bid side, it will push over to the ask side. All right. I want you guys to understand what shorting the market also means and why some people are generally interested in when the market actually goes down. I want you guys to understand what margin trading is and what all the risks are associated with margin trading and especially with leveraging. I want you guys to understand the necessity of charts. Charts basically tell a story. And when you tell the story, you just basically have to open up the book and it's going to give you a very vivid detail of everything that's going on. I also taught you guys how to customize TradingView. Make sure that you're constantly using these tools. It's kind of like a new video game, right? You can only get better at a new video game, or you can only get better with the skills that you might know on a basic level if you keep practicing it every single day. So make sure that you're always putting in the hard work to learn a new platform and to learn the tools. Despite me showing you how to use the basics, it's up to you guys to master them by putting in the hours. I was previously an engineer and I have a lot of AutoCAD experience, for example. I also had a lot of Pro E, which was really good, or Solid Edge as well. These are all 3D modeling programs, right? That I personally have thousands of hours of experience in. But I was only introduced to the very basics. It's until we actually got much better with the program that we knew how to become very proficient with it by putting in tons of man hours. And then we also learned what are technical indicators and how are they used. Technical indicators are basically tools where they perform mathematical calculations that will assist us in figuring out where we could enter a trade, and it will help us in determining what has a higher probability of happening. So technical indicators are something that are absolutely vital to our success as a technical analyst. And we also learn how to differentiate between what is a technical analyst and also what is a fundamental analyst as well. We also learned how to read charts, right? We learned how to analyze candlesticks, what they mean, what is a high, what is a low, what is the open, what is the close, what is a dragonfly doji. And that was more of a basic class that dealt with price action. And now we're going to talk about candlesticks in even more detail in this particular class because we want to talk about how to interpret time frames. So once again, thank you for joining me and let us begin this lesson number 9 together. All right, let's get into this, guys. Let's talk about the importance of time frames. So what do you guys think already the importance of time frames are? I mean, we've got a lot of different time frames, right? We've got even a 1-minute chart. Why would people want to even look at the 1-minute chart, right? That's probably what you guys have heard before already, right? Why do we look at a 5-minute or a 30-minute or a 1 hour or a 3 hour or a 4 hour or a daily or a weekly? Why do people want to look at it on the monthly as well, right? Why the heck do people want to take a look at it on a monthly time frame? Yeah, so there are so many reasons why we need to take a look at time frames on multiple different. Well, we need to look at multiple time frames, I meant to say. So can you guys think of a reason while I have a sip of my water? Think of some reasons why we need to look at different time frames. And what do you guys think that they'll actually show on different time frames as well? So let's think about it, okay? So what a time frame is think of it like a big picture and a little picture, okay? Have you guys ever played, The Sims or something like that, right? Or Sim City or anything like that, where you can zoom in to a very small section of something, or you can stand far back on the edge of the galaxy, for example. If you're standing far back on the edge of the galaxy, maybe you can look at every single solar system, right? You can see everything in every solar system, but you couldn't actually see what's happening, for example, on Earth, right? If you're at the edge of the solar system, that might be like the daily chart, for example, where you're just able to see it from a very big picture. But what's happening on Earth? What's happening, in Japan or Tokyo? So maybe you would want to use a smaller time frame to actually zoom in at that specific structure, right? So the way that I see time frames is it tells a story. And in each of these stories, it formulates a bigger picture overall. So we also, first of all, have to understand just some basic math and divisibility, right? Just basic division. So guys, if for example, I'm just going to show you this, okay? If two candles like this, okay, let's say these are two 1 hour candles each, right? If these are two 1 hour candles each, then that would mean that there are 2 hours total because each one represents what has happened in that specific hour, which also means that if you take both of these combined in a 2 hour candle, that would actually only be one candle, right? Does that make sense? So let's just talk about the basics, okay? So if you take 15 and you divide that by 5, what do you guys get? You get 3, right? So in every 15-minute candle, there would be 3 5-minute candles, right? So how many 3-minute candles would need to make up for a 15-minute candle, guys? I'll give you a second to answer that. Yeah, if you said 5, you're absolutely right. It takes 5 3-minute candles to make a 15-minute candle. So how many candles would it take? How many 15-minute candles? Let me ask you guys this, okay? How many 15-minute candles would form a 30-minute candle? Do you guys know the answer to that? I'll give you guys a few minutes a few seconds to figure out the question, to the answer, okay? How many 30-minute candles would form a 2-hour candle? Okay? Let's just keep asking you guys a bunch of questions, all right? How many 2-hour candles would form a 6-hour, or sorry, a 4-hour candle, we'll say, okay? How many, I'm just going to keep asking you guys a bunch, and I'm going to hope that we're going to go over it together. How many 2-hour candles would form a daily candle? Okay? How many 4-hour candles would form a daily candle? Okay? How many 5-minute candles would form a 1-hour candle? How many 15-minute candles would form a 2-hour candle? How many, we'll say 30-minute candles would form a 4-hour candle? So think of it like this, okay? Every time you have whatever candle you have, like let's say a 15-minute candle. Whoops, I actually wrote this one. Let's just make up a new one here. Would form let's say how many 5-minute candles? Actually, we'll say how many 30-minute candles would form a daily candle, we'll say, okay, for this one. So you have to think of it like this, okay? In 15 minutes, there would be 15 1-minute candles, right? So in every, for example, 15-minute, there would be 3 5-minute candles, or there would be 5 3-minute candles, right? So each one of these candles, depending on the time frame that you're in, will represent a different amount of candles from the lower time frames. So let's go over this first of all, guys. How many 15-minute candles would form a 30-minute candle? It's just division. That's what we'll be doing. We'll be doing some basic math here, okay? If you guys said 2, right on, okay? Right on. So there would be 2 15-minute candles in a 30-minute candle. So let's do a harder one now, okay? How many 30-minute candles would actually form a daily candle, right? So if you think of a daily candle, how many hours are in a day? There's 24. So how many half hours would there be? There would be 48, right? Because since there are 24 1-hour candles in a daily candle, and since there are 2 30-minute candles in each in each 1-hour candle, then that would mean that there would be twice as many, right? So we would take 2 times 24 to get 48 30-minute candles in a daily candle. So how many 2-hour candles would form a 4-hour candle? You would actually get 2-hour candles that would form a 4-hour candle. So how many 2-hour candles would form a daily candle? So first of all, you think of it like how many hours are in a day, right? There's 24. And then you take 24 divided by 2, and what do you get? Yeah, if you said 12, you got it. There'd be 12 2-hour candles that form a daily. So how many 4-hour candles would form a daily candle? Yeah, 6. If you said 6, you got it. How many 5-minute candles would form a 1-hour candle, guys? It'd be 12, right? Because there's 60 minutes, so you take 60 divided by 5, that'd be 12. So let's go to harder ones, okay? How many 15-minute candles would form a 2-hour candle now? So you think of it like this, okay? How many quarters are there per hour? There'd be 4 quarters, right? Or 4 15 minutes. So that would be per hour. So over 2 hours, there would be 8, right? So how many 30-minute candles would form a 4-hour candle? this one would be 8 as well, because there's 2 halves in every hour. So that's 2 per hour multiplied by 4. That's 8. Now let me ask you guys a hard one, which I really don't think you guys are going to get this one, okay? I don't think you guys can get this one. How many 5-minute candles are in a daily candle? I'm going to give you guys a few seconds for this one, okay? If you guys get this one, you guys are going to understand very well how these candles break down and why we look at different time frames. And we will get over the significance as well of why we need to look at all of them and how they correlate and how they make sense when we look at each one. Did you guys get it yet? Okay, I'm not giving you guys more time. Let's think of it like this first, okay? We got to break it down by asking this, okay? How many 5-minute candles are in an hourly candle, right? So we answered this one already, and there are 12 candles, 12 5-minute candles in each hourly candle, right? So if there's 12 candles per hour, and there are 24 hours, then we would just take 12 times 24, right? And what would that be? Yeah, if you guys said 228 or 288 rather, there are 258 5-minute candles in each daily candle. Okay? Isn't that crazy when you think about that, guys, right? That's crazy, right? You guys can review this and rewind it or pause it if you want some more time. So when you think about this one little candle, so we're on a daily candle right now, okay? We are on a daily candle right now, okay? And in the daily candle, if we were to look at it on a 5-minute time frame, okay? Let's just say we looked at just yesterday right there, right? Just yesterday that happened. If I went to a 5-minute candle just to see yesterday, if I looked at this whole section right here, okay? This is from May 6th all the way to May 7 right there. This whole section right here, there's 288 candles. That's right. 288 5-minute candles. And you actually see it go up, and you see it go down, and you see it go up, and you see it go down. More down than up, of course. And all of these candles right here, if you were to look at it throughout the day on a 15-minute chart, right? On a 15-minute chart, instead of seeing 288 candles in one single day, you would actually see 4 times, because there's only 4 15-minute candles per day, right? Or per hour, right? So you would see 4 multiplied by 24. So you would actually see 96 candles instead, right? In one specific day. So as you break it down closer and closer to a higher time frame, you're actually seeing less candles. But if you wanted to see on a very small picture of everything going on, right? You would actually look at it. You want to be on Earth, okay? You want to be on Earth. You want to go there in high detail and find out what is going on in, for example, Japan or in California or in Australia. You're literally there on a 5-minute time frame, and you can see everything around you. You can see all the small ups and downs. Now, let's say you didn't care about the ups and downs as much. So now you would only see 96 candles. Let's say you went to a 30-minute chart, okay? If you went to a 30-minute chart on a daily, what you would see is actually you would see only 24 candles. Oh, sorry, you'd see 48 candles only, right? 48 candles, because there are 48 halves in each day. But what they all tell you is actually the same story. It's just that when you look at it on a small picture, it will actually tell you on a smaller time frame and with more detail what is happening. Okay, that's important to understand. So if you go to an hourly chart, well, there's only 24 hours in a day. So because there's only 24 hours in a day, you're only going to see 24 candles, right? Now, if we went to a 2-hour chart, we would actually only see 12 candles that would actually reflect the entire day. Count with me. One, two, or sorry, you would see 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12. And we're done the day. If you go to a 3 hour, you would actually only see 8 candles, right? Which reflected the entire day. 1, 2, 3, 4, 5, 6, 7, 8. If you went to a 4 hour, you would only see 6 because there are only 4 hour candles in a day. And on a daily chart, when you summarize everything that has happened, what you actually see is just this guy right here. Just this one candle on the left, right there. So if we're looking at it on a 30-minute chart, for example, we can see it's going down, then up, down, then up, down, up, down, up, down, up, down. And then if we actually didn't care about seeing all of this in much more detail, sometimes it's important. Sometimes we want to see what's happening on a small time frame and also on a big time frame, which we actually need to discuss as well. Okay, guys, we need to discuss the importance of these time frames and what time frame you guys should be looking at. So, for example, remember how we were defining what a day trader is, what a swing trader is, and what an investor is as well, right? An investor, think about why they would even care about looking at a very small time frame. An investor likes to look at things from the very big perspective, right? They look at it from the really large perspective of everything going on in the grand scheme of things. And they don't care about the small ups and the small downs that happens throughout the day, right? They don't care about the 30-minute chart. So they would only be looking perhaps on the the daily, they'd look at daily charts. Maybe they would look at weekly charts as well, right? Because they don't really care about day trading like you and I. But let's say a swing trader might be much more interested than trading on a smaller time frame. So what they'll do is they'll look, for example, on a 4 hour chart perhaps, or they'll look on a 2 hour chart or even a daily chart. But the last thing that a swing trader, and the definition of a swing trader, is somebody who takes a position perhaps just a few times a week and they swing it throughout the days, right? So they don't only trade in that specific day, they'll hold longer term positions and they will care about the bigger swings rather than the small ups and downs, right? And so they might even hold their position for up to a week or even two. That's what a swing trader is. Now, what I am is a day trader. So, what a day trader focuses on is I personally believe that day trading can be very profitable compared to other methods, especially when you have a smaller amount of money. And it's also more fun. It's also more thrilling as well. I personally believe that there are many ups and downs throughout the day. And if we played it on, for example, a daily chart, we can easily find reasons to make more profitable trades because we can catch these tiny little ups and downs, right? So depending on the time frame that you're looking at, they all tell the same story, okay? They all tell the exact same story, but one is basically a summary. Think of it like that, okay? If you look at the 15-minute chart, you see a lot going on, right? Lots going on, but let's say you went to a higher time frame. When you say low time frame, it means a low number. When you say a higher time frame, it means a higher number, a bigger time frame. See, so for example, if we looked on the 2 hour chart, it's basically summarizing all of the smaller time frames, right? So if I went to an even bigger time frame now, like the daily, from the 2 hour, the daily is pretty much summarizing what has happened throughout that specific day. So if you're a day trader, you don't really care too much about looking at things like for example, the 2 hour chart or even a four. Like you do care about looking at it, but they're not as important as looking at really high time frames. So what I personally look at is the honestly the 1 minute sometimes, the 3 minute, the 15 minute, and the 30-minute chart mainly. Okay, those are my go-to numbers that I will usually look at because I like to play all of the small bounces. So let's look at what's going on with any coin right now, okay? Let's start with Bitcoin first, okay? We see right now that in the past, for example, let's start on the 5 minute chart, right? We see that in the 5 minute chart right now, and keep in mind that three of these 5 minute candles actually form a 15-minute candle. And if you guys look at the countdown on the right over here, it actually gives us a number, right? It gives us a number and a countdown to when the candle formations will actually finish. So when this countdown actually reaches 0, that is when the candle is going to form. And the significance of this is that a lot of traders will actually wait for these candles to form, because keep in mind that the candles tell us the price action. And when it tells us the price action, we use the history of these specific coins so we can predict the future. It also gives us the momentum at that specific time. So when we have the momentum carrying forward to the next candle, it might actually allow us to gauge what could happen in the future. So this is why we're always looking at coins on different time frames, okay? So let's look at, for example, let's not look at the 5 minute too much, okay? Let's look at the 15-minute chart. We notice that the 15-minute chart has about 4 minutes left to form. Because it has 4 minutes left to form, we also know that, well, if it's only 4 minutes left to form, excuse me, prior to that, we can say, okay, well, two 5 minute candles have already formed, and the next 5 minute candle will actually form part of the 15-minute candle, right? So if we go to the 30-minute candle, we say, okay, there's actually 3 minutes left to form right now. So then we know that one 15-minute candle, this one right here previously, is already adding to that 30-minute candle. And this one that's just about to form will also contribute to this candle that's forming, right? And if we go to the 2 hour, we have another 33 minutes for this candle to form, right? So we see on, for example, a 15-minute chart right here, we see that these two candles right here, right? When you combine both of these candles, this one, okay, I'm just gonna put an arrow for you guys to see that one and that one right there. These two candles are actually going to be forming one of these candles right here, okay? Do you guys see what I'm talking about? Notice how this is on top of together like that, but notice how down here it's just looking like that, right? There's one on each one. But if we actually go to 30-minute, both of these arrows are actually combined together, right? Makes sense? So let's say I went to the hourly chart. So both of these candles right now will actually form. Oh, actually, sorry, I was wrong about that one. Let's go to the 2 hour. So the 2 hour candle, we know that because there's only 32 minutes left, that in the 1 hour, this one actually accounted for it already. Okay, this one right there. And this one that's about to form will also add to it. So these two candles will actually combine to make a single 2 hour candle, right? That's what it's trying to tell us. So if we go to, for example, a 4 hour candle, right? We know that in the 4 hour candle, there's still a lot of ways to go right now still, okay? So on the daily, there's still a lot of ways to go as well. So the reason why we look at these is because sometimes different clues are given in different time frames, right? So right now, there's not too many clues that are giving us signs of support. So what we like to do is go back and forth to each time frame to see if we are finding support on a small level or if we are finding support on a big level. So just as an example right here, what we're finding is that there's actually some temporary support right now already, okay? There's temporary support on a 3 hour candle. It looks really good right now. So overall, in the grand scheme of things, in the bigger picture, we are actually about to find support for Bitcoin. But on the smaller picture, of course, it's going to wave up and down, up and down, up and down. But this entire structure right here, okay? Let's just say we highlighted this entire structure right here, okay? If we went to a bigger time frame, notice how the area becomes smaller and smaller and smaller and smaller and smaller and smaller and smaller, right? Do you guys see what I'm talking about? That whole area that I highlighted right here, this whole thing is actually forming the 3-hour candle, because keep in mind that there's 12 5-minute candles per 1 hour candle. So in a 3-hour candle, there'd be 12 times 36, right? So you guys are going to definitely get the difference between these candles as we're going through it. It just takes a matter of lots and lots of practice, okay? So before the downtrend, okay, just to give you guys a really good idea. So before the downtrend right here, right, we see this cluster region that I'm going to highlight. Now, it may not look like anything on a very small time frame, but let's see what we can see on multiple time frames, okay? So here, it doesn't look like it's doing anything. But if we go to, for example, a 30-minute chart right here, okay, or actually a 15-minute chart, we don't really see that many clues either. But let's say we go to a 30-minute chart, we say to ourselves, wow, we actually see this cluster of candles that's forming to create very bearish candles. And we're here, remember in the previous class, we were talking about seeing this guy here that's known as a hanging man right here, right? And the hanging man implies that the bulls are losing the battle. The bears have simply pushed it down and down and down. There's the wick, right? And then they've pushed it all the way back up, right? So that is starting to imply that we're losing steam over the past hour in these candles. So the 5-minute candles don't really give a lot of clues, right? Not really that many clues at all. But if we go to a 30-minute candle, it definitely is starting to give way. And then after that, those 12 or those 6 candles that form a 30-minute candle ended up combining to make this very bearish doji type of candle. So it also goes the same thing for RSI, right? For RSI, we look at on many different time frames. On a 2-hour time frame, it'll show a different RSI than a 1-hour time frame because there's much more data, right? So on a lower time frame, we're going to see every single bounce up and down, up and down, up and down. And that's what a day trader's bread and butter is, guys, right? We look on low time frames and we try to look for these small little bounces that can actually add up to a lot of gains. Because some days, guys, some days a coin may not even move that much, right? Like let's say on the daily, just yesterday, how much did it move, right? I'm just gonna take a guess. Yesterday it only moved 5%, as you guys can see right there, right? I'm just measuring from the top to here. But now let's say we actually went to a 15-minute chart, right? And 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 um and the daily, like it was pretty much right here, okay? I'm gonna highlight it actually right here, okay, for you guys. So that's the whole day. But we noticed on the daily, it actually only moved 5%, right? It was very, very minor that I showed you earlier. But let's say we went to a 15-minute chart, and let's say we actually tried to play many bounces. Let's say you shorted it, right? And you caught it from here to here. Well, that could be, 2%. Let's say you played it up here as well. Well, that could be another 1%. Let's say you played it from here and you went long. Well, that could be another 1.85. Let's say you went from here to here. Well, that could be like 1.58%. Let's say you played it from here to here as well. That could be 1.49%. And let's say you shorted it for the last one to go down here. Well, take a look, guys, right? The whole day, it actually only moved from about there to about there, right? Which was about 5%, as you can see, right? But if you actually take all of these boxes and you stack them, right? You stacked it on top of each other that represented the actual percentage, okay? Right? You can clearly see that day traders can actually make a lot of money because they can find these bounces in many percentage gains, right? Many percentage gains, which can actually be much, much bigger. If you guys notice what I'm saying, right? The gains could actually be way bigger. So this one here, the whole day, it actually only moved 5%. But if you actually played many bounces throughout the day, you could have actually made 11% profit. So that is what a day trader does. And we look on these lower time frames to try to catch more of these bounces. And that's personally how I trade as well. But back to the importance of time frame. So let's keep looking at what's going on right now, all right? So if we take a look at the 5-minute or the 15-minute chart, for example, on Bitcoin, we can see that there's not too much going on and it's going sideways, right? If we look on the 30-minute chart, we see that there's not really that supportive of a candle yet. We look on an hour chart, and wow, we actually see that the combinations of the many small candles that have added up, it actually ended up forming a fairly bullish type of candle, right? Or not bullish, but it was very supportive, right? So we're seeing a lot of these long wicks, as you guys have noticed, right? And these are actually all formed from, once again, the small candles on the small time frames. Because what the big time frames do is they take a compilation of all the small time frames and they basically add them up, right? And then if we look on the 2-hour chart on the candle, we're getting a dragonfly doji. So let's see what else we can find on other coins as well, okay? Let's go to, for example, EOS, okay? On EOS, on the daily, so if we look at it throughout the day, what we're seeing is that yesterday finished off with a fairly bearish candle. Like this one looks like it's about to make some sort of flag consolidation, right? On the big picture. That's what it honestly looks like to me. So hopefully it does do some sort of flag consolidation. That'd be kind of cool. Not really sure yet what it's going to be doing though, right? Yesterday it finished off with a bearish spinning top kind of candle. Let's actually highlight yesterday, okay? Let's highlight yesterday and let's just talk about many different things that happened throughout the day. So yesterday, the 1-hour candle, that's from here to right about there. So that represented the whole day, right? On the 5-minute chart, that's what happened throughout the day, right? It went up, it went down, it went up, it went down, it went up, it went down. And then we basically want to summarize it, right? We summarize these candles on a higher time frame by getting a summary of it and choosing a different time frame. So when we summarize it, the exact same thing happens. Like if I draw the lines like that, okay, I'm just giving you an example. If I just draw some lines just to connect what happened, right? Like that, like that, like that, like that, like that. If I go to a 5-minute chart, it'll look the exact same thing. It's just going to show more data of what happened, right? So take a look at this and then take a look at that. Take a look at this, right? And then take a look at that. Take a look at this again, right? It's the exact same thing that we're drawing, but it's actually just more compressed. And it also goes with the indicators as well, right? Same thing as the indicators, but the indicators will show you a very different story as well. So we want to do something called find confluence. Remember what finding confluence is? Finding confluence is finding more reasons that lean towards one specific way than the other way. So let's say you're looking for support. What you would want to do is find lots of different candles in many different time frames, right? And that would be a confluent factor. Another confluent factors could be where you're looking at relative strength index, where you're looking at the MACD perhaps, and then you're finding even more reasons where the stars basically align. And that is the actual goal, to ensure that you're finding that the stars align, right? You're finding it on all of these different time frames that just seem to make sense that we're finding support. You're finding it on a 15-minute chart. You're finding it on a 30. You're finding it on a 1-hour chart. So you're finding it basically on every single chart that can possibly tell you that the stars are aligning and they're confluent. So make sure that you guys are always cycling back between every single chart, whether it's the 15-minute chart for a low time frame if you're a day trader, whether it's a 30-minute chart, a 1-hour, a 2-hour. But always remember as well that on higher time frames, they're weighed more. Okay, they're weighed more. Like W, I'm gonna write out just to make sure it's understood. Weighed. They're weighed a lot more, okay? And they're weighed a lot more because that summarizes, keep in mind, every single of the smaller time frames. It gathers them up and it compresses them like that, right? So if I were to look on a daily, like a 1-hour chart, you don't really see a lot of these lines, right, anymore, right? That's pretty much what it ends up looking like. If you go to a 2-hour, you'll barely see it now. If I go to 4-hour, you'll probably barely see it. If I go to a daily, you're not going to see any of them, right? So that's pretty much how it looks like when we compress the data. So if we look for just as an example, okay, on the 4 hour chart, we see kind of zigzagging, right? Just sideways trend. This is actually not a good coin to be looking at right now. There's not a lot of activity. Let's go look at another coin like Bitcoin Cash that has a lot more volatility. If you guys are not familiar with the word volatility, that refers to the heavy price movement and price action of going up and down. You want something to be volatile, to be violently moving up and down a lot, right? So volatility is definitely your best friend. So right now, what we're seeing is that it's about to do, we're getting one big green candle on a 15-minute chart, right? 15-minute chart, not bad. On a 30-minute chart, where it takes more of the smaller time frames and compresses them, because this is a higher one, we see kind of a support candle right here that's bouncing off of the EMA, right? The moving average, okay? So if we take a look at this time frame right here, on a 1 hour, we're finding some very bullish candles actually of support, right? We're finding lots of wicks coming down where it's taking all of the smaller time frames and it's adding them up in these bigger time frames, right? So we're definitely finding support right here. If we look on the 2 hour chart as well, we see that the 2 hour chart, keep in mind as well that every single time frame will have different things like moving averages. Notice how this one on the 2 hour chart is hitting the yellow line, right? But on the 1 hour chart, it's actually below the yellow line. So on the 45-minute chart, it's well below it. But on the 4 hour chart, it's well above it. Can you guys think of a reason why that is? If you are familiar with moving averages already, okay? If you're not familiar with it, let me explain it to you guys. It's because the moving average takes a sample of all of the data in the past. Let's say you have a 50 moving average. The moving average will take a sample of 50 of the past candles and make an average of the price, right? So because on the 4 hour, right, it definitely looks a lot differently, right? On the 5 minute, because on a 5 minute candle, for example, okay, let's, you know, it'll take in an hour 12 of them, right? So if you're on a 55 moving average, it's definitely going to look incredibly different. But what we want to focus on is trying to find trends on a very small time frame, a low time frame, right? For example, a 30-minute time frame, and we want to see if it's actually going to cascade over to a higher time frame. So right now, what we see, just as an example, okay, what we want to see is we see that Bitcoin is definitely in a downtrend now, right? We see it in a downtrend on a 30-minute chart, okay? Because it's well below these moving averages. We see it in a downtrend on a 45-minute chart. We see it in a downtrend on like below the yellow line is what I mean, on a 2 hour chart. And we finally start to see it in a downtrend below the 2 hour chart as well. But the 3 hour chart, we see it in a downtrend as well. On the 4 hour chart, we barely see it in a downtrend. But what we want to see is, well, the daily chart is not really seen on a downtrend below the yellow line, right? So usually when things happen on a small time frame, we want to see if it's going to happen on the bigger time frame as well. And if they do happen on the bigger time frame, this will actually confirm a greater degree trend, right? So the last thing we want is to have a bear market right now in Bitcoin. We want to see if this is actually going to hold stable. So I hope that I've given you guys a lot of insight when it comes to time frames. The best way to practice, guys, right? The best way to practice is to just practice. And that's how you will get a lot more skills under your belt. I'm very grateful to be your tutor and to be your instructor and to be your guide in this journey with Bitcoin, but make sure that you guys are also putting in tons of hard work so you can make sure that you add to your success. The probability of you guys succeeding is a lot higher when you also put in the work. So make sure you're studying every day. Make sure you're going through these time frames. You have to think of it like a video game, right? Someone can give you a guide on the video game and they can show you the strategy, but it's up to you guys to keep practicing to get a lot better. So I hope I've given you guys tons of insight. In this particular video, what we reviewed was the differences in time frames. We also talked about what day traders look at and why they actually look at a lower time frame, right? Day traders look at a very low time frame because they want to focus on what is happening in the small picture, what is happening in the big picture as well, right? Or sorry, what is happening in the small picture, but on because we want to play those little bounces up and down often. But a swing trader, what they focus on is they actually focus on higher time frames because they don't care about the small bounces since they're not making as many trades, right? And there's no one way that's better than the other, guys. Really, there's no one way that's better than the other. It literally just comes down to your personal trading preference. And some people trade only on the daily, right? If you're an investor, you're most likely looking at probably not even the daily. You're probably just looking at the weekly. Investors really don't trade, right? They just hold for a long time. And the thing about trading or just trading or swing trading or investing or charts in general is that you will actually find out who you are very quickly, right? You'll find out so quickly who you guys are. Are you guys a day trader? Are you a swing trader? You can use any time frame and you can play any time frame that you want to as well. It doesn't really matter, right? But the cool thing about trading is your personality will actually mold your trading style. For example, my trading style, guys, I'm very as you guys know, right? I've got a lot of energy, right? Lots of enthusiasm, lots of energy. So to me, swing trading a few times a week, maybe one or two or three trades a week, it's not my style. I have to make sure that I'm in a very fast-paced environment, you know. It needs to be fast-paced. I like to get in and out of trades. I like that really feel-good moment of making $200-300 in 10 minutes. It feels very good to do that, right? So that's why that we will always end up finding our style, and you're gonna find out what kind of person that you actually are very quickly as well, guys. I mean it, right? You're gonna find out, hey, am I this kind of person that likes to do this? Am I this kind of person that likes to do that? And the time frames will actually it'll actually equate to your personality as well. So you guys are going to find a lot of correlation between real life, who you are, and you'll discover very quickly as well what you can handle and what you cannot handle, right? Some people cannot trade on low time frames because there's simply too many bounces, right? And it's very stressful for myself. That's where my bread and my butter is, and that's what I will be teaching in my style for lesson number 17. So I hope that you guys always remember that it always comes down to adding everything up on a small time frame, right? Adding it all up and you see it on a big time frame. A big time frame, like a daily, basically takes all of the little time frames and they add them up and they compress it into one bundle of data to give you basically an overall view and a very big picture of everything. That is the important thing to know. But another important thing to know is that we need to make sure we look on all time frames, okay? You cannot just look at one time frame. You have to look at every single time frame because they all tell a different story. And because they all tell a different story, right? You got to make sure that you're reading this book to try to get data because when you're looking at it on every single time frame, it might leave little clues, right? Oh yeah, this time frame is supportive. This time frame is supportive. Oh no, this time frame looks like it's still bad. It's still bad. And then eventually you will make a decision, a consensus. You'll formulate a probability of, hey, is it actually leaning more towards, the right here, or is it leaning more towards the left over here? So you guys will be able to figure that out very quickly. But don't forget, guys, ever that every single time frame is very important, and you have to look at every single time frame. And what I advise for you guys to do is always put in the hard work of just playing around with time frames and seeing what is the difference between everything going on in every single time frame. So I hope you guys have thoroughly enjoyed lesson number 9, which covered time frames. I've had a pleasure talking to you guys about it. I hope that you've had a great time learning everything thus far already up until now. now, I highly encourage you guys to leave a lot of questions, okay? Because questions is what allows us to grow and learn. And I want to make sure that I'm attentive because I am your instructor. You guys are my students. You guys did pay for the material, okay? So I want to make sure that you are getting every single dollar's worth. So make sure, guys, ask those questions. Don't be shy. I have your guys' back. I support you 100%. I want you to succeed. You are my students. And make sure that you guys understand that I will be answering these questions because your success could ultimately come down to the questions that you're asking as well and your interaction with me. So thank you very much for giving me this privilege of teaching you guys how to interpret time frames, the difference between swing trading, the difference between day trading, the difference between investing. What do all of these different time frames mean and how they actually correlated to each other? I hope you had a wonderful time learning everything thus far and especially enjoyed this class. And I will see you for lesson number 10, where we will be talking about what are supports, resistances, and also trend lines and channels as well. And we're also going to be talking about why they're important in terms of how we play these breakouts. So I look forward to you guys joining me for another class for lesson number 10, and I'll see you very soon in the near future. Have yourselves a great day now. Bye and take care.